Hey traders, it's Greg. So the Qs hit our downside target that I covered this morning pre-market. If you weren't there, you had to log into YouTube and it's on Facebook. Dan and I are there each morning at 9 o'clock and we review our assumptions for the day, what's happening. So today I went over what would the downside target be based on a percentage to the downside in the Qs and went over the support. Um, And this area, and also let me just put this on here on the weekly chart is what I covered, this congestion and the rising 20 MA there, which is equal to the 100 MA on the daily time frame. So if you put a 100 on your daily chart and a 20 on your weekly chart, you'll see that they're roughly very closely in the same spot. So that's why I don't put the 100 on there. So hit that downside target and show the difference of yesterday versus today and what you should look for, whether it's intraday or whether it's a daily time frame. See the way it went down here yesterday? Very controlled. Bars about equal in length. It tries to go up and it fails. And again, drifting, 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 drifting. And so lows typically happen when traders are convinced that it's going to keep going down and it begins to accelerate lower. And that's exactly what it did as prices reached our reference area and it bottomed out there. So where are we at now? Up at resistance. That's where it stopped going up. Now it got above momentarily above yesterday's close and today's open. That's what those red and blue lines are. And so now it's beginning to roll over a little bit. You can see the pivot right there where the moment it is stalled. The clear question, obvious question is, does it close with a bottoming tail bar? It could be a red bar at the end of the day. And I was just talking in the room a little while ago that, look, it hit our area. It had a nice bounce up. It would not be unusual for this to come down and retest this. I don't know if it will, but it would not mean that we don't have a good low in place here. It's yet to be seen. Many times when you get a strong move, it comes back down again, and it could come down tomorrow. We'll see how it unfolds. Right now, it's coming into lunchtime. Traders are waiting to see what it's going to do. I'm sure some sold up there at resistance, and so as the day progresses, we'll just see where this is, where it holds, where it doesn't, and we'll go from there. Looking at a few of the others, we have the spiders. We covered that they were on the 50 MA, so they got dragged down with the Qs. They were showing some relative strength, but they came down there and filled that gap. All right, good sign. Also could come down. IWM continues to show relative strength. Institutions clearly are into the small caps. That's a good thing. So while they're running from the big caps, the mega caps, they're looking for small caps, which means they are feeling confident about speculating and that these will continue to play catch up. So we'll see where this ends. NDY, mid caps look even better than the small caps. So we can start going through these, see how they're holding up. Notice how this cleared, got up to the resistance, but it had a stronger move off of the low. I'm going to start going through stocks within that sector to see what's showing relative strength and weakness, what kind of patterns there are. Financials, they look okay, not bad. But this is exactly what I was looking for to happen. So some, was speculating that this little shallow pullback would be enough because of the strength here. It could have been. But typically, shallow pullbacks like that, after the damage that we saw happening in the leaders, the mega caps, typically don't work out. So what I said was it would be great if this would come down and make a lower low, maybe get to this minor support. Maybe it's not going to get there. It'll that other pivot. And so if it can make this hold and close green today, that'll be a good sign. We'll keep an eye on that. Consumer staples holding up there, materials. So a lot of things turned around. So a broad-based reversal. Industrials, this is the ETF. It's not the Dow. can take a look at the Dow. Not a bad turn right there on that support and the rising 20 MA. So that's looking good. Tech obviously doesn't look so good. It came down to support and it's holding there. So those will likely continue to underperform. Communication services, breaking down. I'm just going to take a peek here and see what is doing badly here today. Well, badly overall, but yeah, Google's still down. So, the leaders not doing well. Well, I guess people aren't going to Disney. I wouldn't. I live down here. I don't live in Orlando, but with all that heat, can't imagine wanting to walk around there. But anyway, consumer discretionary beaten down. So the market is going to continue to be in a mode of picking the right stocks and the right sectors. What is showing strength? Maybe some catch-up trades. Catch-up trades are laggards that start to outperform. So we'll be looking for those. I'm sure we're going to be able to find some put spreads, hopefully expiring relatively in a short amount of time. And yeah, so we'll see how things progress and update in the latter part of the day. So if you have any questions, email us, Greg and Dan at Master Trader.